What is good, YouTube? We are here with episode 3 of the Den Academy, heading into what is liquidity. We will be hopping into the charts, and I will be showing you guys where liquidity lies and what liquidity is. Okay, so this is episode 3, what is liquidity of the Den Academy. Now, there are two types of liquidity. It is buy side and sell side. Buy side, which is abbreviated BSL, buy side liquidity, is where buy stops reside, right? So if you're in a short position, you have to put your stop loss as a buy stop, right? So that is where your buy stops reside in buy side liquidity. Sell side liquidity, which is abbreviated SSL, sell side liquidity, is where sell stops reside, right? So if you're in a buy position, your stop loss goes under a swing low on the sell side liquidity marks, right? So it's where your sell stop will reside whenever you're in a buy position, right? So liquidity lies below swing lows and above swing highs, right? So if you're in a position, most of the time you put your buy stop or your sell stop above a swing high or below a swing low. That is where buy side and sell side liquidity lies, right? Above highs and below lows. Price hunts these swing highs and swing lows and does two things. It will either reverse off of them or it will continue through them, right? But continuing through them is going to be further down the line. In this case, we are just going to say price hunts these swing highs and swing lows and reverses off of them, okay? The second option is going to be described further down in later videos. But this is all liquidity is. It's just buy side and sell side liquidity, and these are the abbreviations. So buy side is where buy stops are, and sell side is where sell stops are. So if I'm going to show you a depiction of buy side and sell side liquidity, over here to the left, we have our sell side liquidity. All right, so below these swing lows right here are going to be your sell side liquidity marks, right? So all it is you're looking for these swing lows and you're marking them off for your sell side liquidity. Now the opposite for buy side liquidity. In this case, we have buy side and buy side, buy side and buy side. Now whenever we take buy side and don't continue through it, that becomes another buy side objective. So this case right here, we take this buy side but don't go straight through it. It then becomes a later target for buy side liquidity, right? So these two depictions right here are representing sell side liquidity to the left and buy side liquidity to the right. Okay, so we can hop into the charts, and I'm just going to show you guys and mark off where buy side and sell side liquidity lies. So if we're just starting here on this silver chart and we're looking for sell side liquidity, all we're going to be doing is marking off right here. So right here in this case, we have sell side liquidity. Price comes down and sweeps this sell side and reverses off of it, right? So in this case, whenever we dump lower, we have sell side resting down here and price comes down and reverses off of it, right? So if we were to mark off buy side liquidity, all we have to do is do this: find our swing highs, mark them off, and then that becomes buy side liquidity. Same thing right here. This becomes buy side liquidity. And then once again, we have buy side liquidity resting right here, right? So whenever you're on a daily chart and you're looking for buy side or sell side liquidity, it's just going to be these swing highs right here, right? So we can go down to the 4 hour, remove these drawings, and then we have more swing highs to work off of, right? So in this case, we have this sell side liquidity mark right here. Oops. We have sell side liquidity resting right here, and we don't have buy side because there's no swing highs yet. So if we were to trade an intraday session and there's no swing highs, if we just go down to the hourly chart, let's say we wanted to trade from this sell side, now we have a buy side liquidity mark right here because we have a swing high, right? So if there's no identifiable swing high, like if we go to the daily and there's no swing high up here, right? We're at all-time highs. We can mark this off, go down to the hourly chart, and we have a swing high on the hourly time frame, right? So this is buy side liquidity raid, right? So this becomes sell side. So you guys are seeing how we are going from buy side to sell side, and right here we can mark off this low, right? Because we also sweep this one, but this one's an old low over here, right? And we take it right here, so we take sell side liquidity and reverse off of it. But if we look here, there's no swing high, right? So let's go into replay and just go right here, and we can go down to the 15-minute, right? So what do we notice? We come down and we sweep that sell side liquidity mark, and now we have buy side objectives, right? So another thing that we're going to be going over in later videos is internal and external. So this becomes your internal liquidity mark, right? Which will be explained in the internal to external video. But you guys can see that we take sell side, reverse off of it, and then we hunt buy side, right? So right here, we take buy side, and then we take sell side, right? And then we continue through this sell side. So once again, this is where you're going to have to understand later videos down the line on, okay, well, we took sell side right here. How do I know we're not going to reverse off of it, right? So coming into the charts, it's very simple to understand where buy side and sell side liquidity is. So like if we're coming into this day right here and we don't have a swing high really right here, right? Except for up here, but you guys can see we don't get there. We can just mark off this high. Let's go down to the 30-minute. What's it become? A swing high, right? So we now have a liquidity pool. And what's price do? Goes above it, consolidates a little bit, and then reverses off of it. Maybe it's an hourly swing high as well. Yep, as you guys can see, it's an hourly swing high as well. So what happens up here? We take this high, we put in a swing low here, right? As you guys can see, there's no really swing low. Like this is whenever you really wouldn't use this because there's not much of a range from this low to this high, right? From this high to this low, there's not really a range, so you're not going to use that. You wait for price to create the swing low and create liquidity, right? So in this case, there's no swing low or important swing low in this price leg. But once we create this swing low here, create this swing low and this swing low, right? This is building up liquidity, right? All these equal lows will get ran. So whenever you see equal lows and equal highs, a majority of the time, they are most likely going to get ran. So this becomes a high probability draw on liquidity, right? So maybe I can find, yeah, like right here, look at all these highs. We don't take any buy side liquidity throughout here, right? So this is building up liquidity. Okay, so this is just a buildup of liquidity, and whenever we run them, it's going to be relatively quick, right? So as you guys can see, we take this first high here, and then we retrace off of it, but then we absolutely just run through all these highs, right? These are relatively equal highs up through here, right? Right here we have an equal high with this one, right? So whenever we create equal highs and equal lows, it becomes a high probability draw on liquidity. I'm trying to see if I can find, like, right here, right? We have relatively equal lows right here. This is a high probability draw on liquidity. Also this one down here, right? This is a high probability sell side draw on liquidity, right? So whenever you're looking for buy side and sell side liquidity, all it is old swing highs and old swing lows. So as you guys can see here, we have a swing low, we have a swing high, price consolidates in the middle, takes the sell side liquidity and immediately goes to the buy side liquidity. Right, so this is what buy side and sell side liquidity is. It's just swing highs and swing lows where buy stops reside. So just so you guys can understand the picture, if I was to enter a short position here, right, I'm in a sell. What do I have to do up here? I have to put a buy stop, right? So that's where buy stops reside, above buy side liquidity. Now, if I was to enter a long right here with a stop loss below this swing low, I have to put a sell stop. So this is where sell side liquidity resides, right? And you will see a lot of the time price taking these highs and then retracing or a reversal off of it. Now, yes, of course, like this right here, we absolutely just cruise right through it. You will understand that in later videos. Like I can't just go into everything on episode 1, you know? So like right here, buy side liquidity gets swept. Where do we go? Sell side liquidity, right? Relative equal lows, boom, sell side liquidity, right? So what aren't relative equal lows? Well, I would not consider this to be relative equal lows for this session here. And why is that? Well, it's because we have swept sell side liquidity already. That's why you guys see we create these relative equal lows and then just run in the opposite direction. We've already taken sell side liquidity. We don't need to retake these equal lows, right? So that's whenever you can say to yourself, okay, well, in this session here, we don't need to take these lows because we've already swept sell side liquidity, right? So this is what sell side and buy side liquidity is. Whenever you're coming into the day, let's say a daily time frame, and you want to trade this day here, but there's no relative swing high right here, just mark off the previous day, go down to the lower time frame, and it becomes a swing high, right? If there is a swing low here, right, and that's your target for the day, let's go over. What do you want to wait for? Well, you're going to wait for a buy side liquidity raid and then target the sell side liquidity, right? The lower time frames give you your intraday reversals, okay? So that's whenever you target sell side liquidity or buy side liquidity. That is what buy side and sell side liquidity is. It's very simple stuff, but this was the introduction to liquidity, and in the next video we will be going over like session liquidities, previous day highs and lows and stuff like that. So if you're you shouldn't actually be confused about this because it's really simple. Sell side liquidity just resides beneath lows and buy side liquidity resides above highs, right? So that's literally it. Okay, so if you're confused about anything though, just leave it in the comments, I'll answer it. Other than that, that's going to be episode 3 of the Den Academy, Introduction to Liquidity. Hope you guys enjoyed the video. I'm going to get out of here. Peace.